right, ladies and gentlemen, welcome. According to our magic iPhones, which, by the way, has become the timekeeper for us. If it says that on the iPhone, we go for it. I'm really looking forward to hearing this next presentation. We're going to be talking about blockchain and what's going on there, and particularly how we're going to be able to see blockchain in monetary policy. And this is sponsored by the Digital Chamber of Commerce. And they look at where we're going, how this is going to integrate into our society, and what blockchain is. One of the things I like, as you can see, we've got a panel here. I particularly like the panel. The format of that gives you the idea of being able to hear from many different points of view. So I would welcome your questions. We should have enough time for some. Write those down as we go, and toward the end, we want to do that. It'll be up to the panel to do that. But now what I would like to do is to invite those on the panel to come on board, and they'll introduce themselves. Come on up.
Thank you for the introduction. In terms of timing, we have until what time? 1:55. 1:55, okay. All right, you guys have to keep me honest on the time. Got it. Thank you for the introduction. My name is Perianne, and I'm the founder and president of the Chamber of Digital Commerce. And we're going to be talking about blockchain and monetary policy. So some crypto economics, which it takes a real nerd to truly appreciate this topic. I think that all the cool people are still in the tent partying, listening to music, and while we're going to get down into some cool details in terms of how Bitcoin and blockchain is really changing the world in terms of economics and the flow of money and how people interact with that. So I'll have each of our panelists introduce themselves. So your name, where you're from, where you're coming in from today. I'm coming in from DC, and a little bit of background of your work in the blockchain sector.
I'm Ellen Brown. I'm the founder and chairman of the Public Banking Institute, and I've just finished a book called The Coming Revolution in Banking, Democratizing Finance in the Digital Age. So I've written a lot about blockchain and researched it.
And you're coming in from where?
Oh, sorry, I'm from Los Angeles.
All right.
Patrick Byrne. I'm in from Salt Lake City, Utah. I'm the founder and CEO of Overstock.com. We have a incubator we started a few years ago within Overstock called Medici, that is incubator VC for blockchain and fintech endeavors, of which we have 9. And one that I'm most proud of is we have a investment in a company in Barbados that is basically blockchain meets central banking, which may be why I'm here on this committee today.
So I'm Catherine. And you came in from
Salt Lake.
You've been on a whole.
Yes, well, I've been on a whole tour. I've been all over the world, but just Lima, Peru, I guess, is the most recent exotic place.
And based in Utah.
And Beijing, pardon me?
Based in Utah, right?
Based in Utah, just in from Beijing, actually.
Oh, okay. Can you
Wow.
I'm Catherine Austin Fitz. I'm publisher of the Solari Report. I'm from Hickory Valley, Tennessee, which is a small cotton farming community west of, an hour east of Memphis. I am very interested in how blockchain technology can be used to enforce the Constitution. One of the things I've been tracking for many years is we have now 19 trillion and counting missing from the federal government. I'd like to get it back so that whether we have a government or not, we can make sure all the obligations that the government has made to you can be fulfilled. So I'm here learning.
Good to join all of you. I'm Dennis Kucinich from Cleveland, Ohio. I served 16 years in the United States Congress, and I come to this issue as someone who, after 5 years of work, created a legislative vehicle by which we would transform the role of the Federal Reserve, take America from away from a debt-based economic system. And what I saw in looking at the blockchain technology are some similarities in what the bill that I wrote called the NEED Act does. And the NEED Act is an asset-based system. The blockchain works on an asset-based system. It's peer-to-peer, as is blockchain. It doesn't create inflation, nor does blockchain. It's account holder to account holder. There is accountability and there's auditability. So these are all features of the work that, the bill that I've written, and it kind of fits in very nicely with a number of features of blockchain technology. I'm very happy to join you and glad to have the opportunity to participate.
Thank you.
Thank you very much. All right, so in terms of blockchain and monetary policy, through the work that we do at the Chamber of Digital Commerce, we're headquartered in Washington, D.C., and very much a part of that dialogue between the industry and technologists and government. So we see government intervention as a major risk to the hindrance of adoption of this technology. So our goal is to work with government, public policy makers, and ensure that when they look at this technology, they do so in a way that will support innovation, that will foster innovation, technology, entrepreneurship, investment, jobs. But at the same time, they also hold the guns, and regulators regulate, so they have their concerns like consumer protections, investor protections, so on and so forth. So trying to meet their goals while also allowing the technology to thrive. In terms of central banks, and some central banks operate as both a regulator and the controller of monetary policy, but not every country. The Fed is an example of that. But for example, in Canada, their central bank only does monetary policy. They're not also a regulator. So we'll focus on the monetary policy piece for this discussion. And in terms of central banks getting involved, so we do know that this is certainly on their radar. We've seen a number of comments in the news throughout the world from the Fed and other central banks. But what do you think central banks should be doing today in regards to Bitcoin, blockchain, crypto? What type of action or advice, if you were advising a central bank, maybe you are, what would you give? And this is kind of just open to the panel. Sure.
How much time would you prefer we each use to go over this?
You know, we have an hour, so go crazy.
We have an hour and about 8 questions or 10 questions.
Yeah, but I'm just asking, just as a protocol, so just each take a few minutes?
Couple minutes, yeah.
Okay, great. Okay, well, central banks have to continue to monitor the use of cryptocurrencies and have to investigate the applicability of blockchain and distributed ledger technologies. And they have to work with national treasuries and finance ministries and revenue agencies to continue tracking transactions that are made with cryptocurrencies. As many of you know, the chain analysis system is already being used by the IRS to deal with issues of anti-money laundering and to make sure international laws and agreements are upheld. I think what we have here with blockchain is an opportunity to cause central banks to rethink and restructure the architecture of our national monetary and financial systems to make them less fragile and less and more resilient. The current system has its structural defects with respect to systematizing banking crises, government debt accumulation, income inequality, environmental destruction. And so the biggest problem would be if central banks would blindly replicate the current system. What I spoke about earlier is this legislation called the NEAT Act for an asset-based system with safe and secure peer-to-peer architecture. So the central banks have a role to play, certainly, but I think that in this whole process of talking about blockchain, we will come up with some ways that central banks will be enabled to rethink the position that they've taken with respect to their current structure, which has a lot of flaws.
May I jump in?
Please.
Or would you?
Go.
Please.
No, you go.
I'm a big fan of yours, actually.
Okay, you go.
Oh, okay. I'm reminded of, central banks should be digitizing their fiat currency onto the blockchain and letting us go forward with that. We have to. There are many of us who feel. Milton Friedman was once asked by the Federal Reserve of Minneapolis magazine, Bank magazine, in an interview in 1992, what's the most important issue facing America? And he said the most important issue facing America is how do we get rid of you, the Federal Reserve? and that's it. And I'm reminded Thomas Sowell was once asked during an interview, and he said, by somebody who didn't get who he was talking to, and Sowell said, we should cut it. What should we do at the Federal Reserve? We should cut it out. We should, eliminate it. And then the guy immediately said, because he was a conservative Republican, immediately said, well, what do we replace it with? What? And he said, listen, it's like cancer. When someone says take out a tumor, they don't say, what am I going to replace it with? So however, I'm afraid that central bankers are going to see this as a step in that direction, which it is, but setting that, it's a step in that direction if we are in the right about that. But in the meantime, it's a way that they can add about 2% growth rate to their economy if they digitize their fiat.
Okay. So if I was advising a central bank, I'd probably be telling them what was good for them, and I'm not sure for the reasons Patrick just eloquently described and Dennis described that I want to do that. So what I would say to the central bank, we have several problems. One is our political system doesn't have integrity. Our financial system doesn't have integrity, and unfortunately, our digital systems don't have integrity. Now, blockchain, if I understand it correctly, has the potential to really help to start to move the digital systems to integrity. And if we can do that, then we can start to move these other systems to integrity. And the question is how we do it. So one of the things I would ask a central bank to do is to simply prototype blockchain internally so that they learn what it is and how to use it, that they work with their member banks to do it, particularly the smaller banks, because my concern is it will consolidate us into the banks that have the most force and power in the system. And then the third thing I would say is if we're going to get the entrepreneur back into the game in a changing economy, we need digital systems that have integrity. And if you want to be helpful here and make this technology accessible at the community and local level, the community banks could play a very important role in this. We're going to need your help at a federal level to try and bring real integrity to the digital systems. And that's a leadership role that they could play.
That will probably sell better.
So if they were actually listening to me, what I would say is, or what I think they should say is, good idea, let's do that. And that they should imitate that model, which is what they are talking about, they're talking about central bank digital currencies, which I actually think is an excellent idea because currently only about 5% of the money supply is actually created by our central bank. All of the rest is created privately by banks when they make loans. So what they're talking about in England would be a central bank digital currency on a blockchain or something like a blockchain. I think they're looking at Ripple right now, which is not exactly a blockchain. It's sort of a series of blocks rather than a global distributed ledger, which is a bit slow and expensive for a national currency. So if you had a central bank digital currency on cryptographically, whatever, all the techniques you're talking about, if they use the best of those techniques, they could open up their deposit window. What they're talking about is opening up their deposit window to everyone, which would be great. We could avoid banking crises. We could avoid deposit insurance. I mean, they've got the deep pocket. There's no way they're going to run out of money. We could get rid of the part of the repo market that's just there to service funds that have over $250,000 that don't have any place else to put their money. But their concern in doing it is that where would the banks get the money to then make loans, and that they would bankrupt the banks. But it seems to me what they should do then is also open their lending windows to individuals. Now that we know that banks don't actually lend their deposits, but create the money they lend on their books, the Federal Reserve could do that just as easily. Basically, you'd be borrowing from the cloud, and so you don't really need a private bank fractional reserve system. You could be borrowing, you'd be monetizing your own promise to repay, which is what banks do, but it would be much more efficient on a central bank blockchain type system.
Yeah, well, that's a perfect segue into the next question here. So assume that central banks do take notice to your great advice and they do start looking to implement blockchain technology. What types of benefits can that pose? And you've touched on those, but I want to open it up to the panel. What types of benefits can blockchain bring to monetary policy? And what types of risk also should we be thinking about and considering?
The benefits are pretty obvious. If you have a blockchain or a distributed ledger, it can't be copied or counterfeited. Now, but if you're talking about the risks, those too can be apparent. Insider trading, the potential of monopoly within the blockchain. Of course, depends on the coding. You're talking about people could essentially engineer their own merger and acquisition within a blockchain. And on a larger level, you could be looking at the creation of a financial weapon of mass destruction, where blockchain power is amassed and used to damage others. But those are risks that, as opposed to the benefits, which are pretty obvious.
So I would say that as somebody who tries to affect international payments with great disgust, there are two very powerful things that we want. We want to be able to transact with each other across borders very simply at low cost. And the second thing is we want to be able to connect and transact with everybody, as everybody comes into the global markets. And in theory, if we could make a blockchain technology scalable, this gives us the opportunity to do it. And not only do that, but do it in a way which I love, believe it or not, given that I'm a finance person. We can re-optimize so many transactions on the asset side of the balance sheet. We can cut the finance guys out of almost everything. And the efficiencies of that are wonderful, but it comes back to who rules and who controls. And my fear is you can't solve a political problem with a financial or technology tool. And we have a political problem on this planet, and the political problem we have, the governance structure we have now rules by physical force. And we can blockchain all we want, but as long as they can tear up the pipes, it still won't address that physical force.
The advantages that we can point out to them are two. One is that they will have much better surveillance of the economy, just in the sense of knowing what money is doing, money and how much velocity and such. They'll have better instrumentation, so to speak, on the economy. They'll also, and this is an uncomfortable point for us, but in a digital economy, there will not be much opportunity for tax avoidance. Currently, tax avoidance is about 40% in the United States. And in other words, if everyone followed the rules, about 40% more taxes would be being paid than are paid. That's enough to solve the deficit crisis. And so if we, in a digital economy, the government is going to theoretically collect 40% more tax revenue, that's something to sell them disadvantages. Well, and actually another thing, if they're honest central bankers, I don't know if there are any left. There was a time that honest central bankers were supposed to be outside political influence. And there are even some like John Taylor out at Stanford, who actually is copying Milton Friedman from the 50s, saying we should just come up with a very simple rule for central bankers. Let's stop thinking of them. There's a great LSE economist who refers to them as like tinkerers. They think they're standing at this big machine and they're dialing in, tuning in the carburetor just right. You know, it's a huge conceit, and it's silly. And we all know at this point, they just reflate us out of crises, and the crises get bigger and bigger and almost maybe inescapable now. A simple rule, but you know, there are such things like the Taylor rule that have been proposed. Very simple rules that central bankers stop trying to fine-tune economic booms and busts and just follow this very simple rule. That could all be pre-programmed in to a digital-based fiat and take all the guesswork out. And there's somebody won the Nobel Prize a few years ago for this thing called rational expectations theory, which says that in the medium and long term, none of this tinkering matters, that people learn we collectively understand and adjust our habits in response. So these government attempts to change our behavior through stimulus and Keynesian and monetary stimulus ultimately just wash themselves out anyway. So we can get rid of it all and just go actually to a very simple, if we don't get rid of central banking altogether, we can go to central banking that is actually very rule-based, and that can all just be literally programmed into the system.
Well, you could actually, in effect, eliminate the central bank, or eliminate all banks, including the central bank, although they'd be there. It seems to me that the most efficient digital system would be the dollar, because everybody already accepts the dollar, but they would have nothing to do with it. I mean, once the algorithm was programmed and you put in whatever smart contracts you needed to put into it, there would be no tinkering necessary, or, I mean, to me, that would be the ideal, to have an algorithm that was able to run this whole system without human intervention. But I'm sure that's a long way off. But it seems to me it's possible, just from hearing people talk about what they've done already.
No, I mean, it's absolutely possible from a technical perspective. But is it realistic? You know, and Catherine kind of hinted on this rule of force, and that, you know, governments, you know, they carry the guns, and ultimately they get to make the rules. So something we've really been kind of spending a lot of time thinking about is, you know, what is the relevance and central banks in this, you know, in crypto economics? So, I mean, my theory, kind of my ethos of how I think about this is, in a free society like the United States, supposedly, we should have the ability to choose what we use as money. We should have the freedom to pick what we want to trade goods and services for. And it could be a government product like the fiat US dollar, but it should also be allowed to be cryptocurrencies, Bitcoin, or whatever else people deem appropriate. I mean, through the ages, we've used gold and silver and wampum and tally sticks and salt, and what does it matter, you know, if that's what we decide we want to use. And in a thriving economy also, you would have options. So people are unique, we're different. We have different qualities and values and things we care about, and in a successful free market ecosystem, people have options. There's no one size fits all because we're all different. So I think the emergence of these additional monetary systems create diversity for the industry as a whole and globally, and also gives people the option to opt into systems that meet their values. So if we see central banks start seeing and recognizing the benefits of this technology, how would that impact, say, Bitcoin? Is that a good thing? Is that a bad thing? Is it going to take away from the Bitcoin economy? How will that impact the ecosystem that's building, specifically in Bitcoin?
If the central bank did So the question was, if a central bank issues a cryptocurrency and embrace the technology, how would it impact Bitcoin? So now that I'm talking in the microphone, I'll just take it. It depends on what they do. If they decide to have a monopoly, which I'm assuming that they will probably do, so if you look at what the Chinese bank has said or the Indian bank has said, but if they decide they're going to do a monopoly on cryptocurrency, then Bitcoin's going to go to a very low value very fast. I think the big issue is if somebody comes up with a technology which is really scalable. So we hear a lot of criticism about scalability, particularly, and we also hear criticism about coming up with a system that doesn't require miners. The question is, will an independent system like that, can it be able to beat the regulators? I would say with the current system in the United States, no. So if you look at the way force is applied to suppress local currencies, the way it's used to suppress using gold as a currency in the United States, I would say that if the central bank decides it's going to have a monopoly, it's going to be pretty successful at suppression. That was a cheery thought. However, if we all decided to do something about who owns the central bank, then maybe we would get somewhere.
And it seems to me, since your job is to actually advise on how they should, what they should do with these currencies. Right now we have community currencies, which are quite legal, and they're in a community exchanging with itself. And the problem is that they're not scalable. In other words, you trust the people in your community, but it's difficult to spend that currency in another community because they don't know you, they don't know whether to trust you. You can't spend it with your utility bill, et cetera. But the promise of all this technology is that now they're coming out with systems that do allow community currencies to talk to each other and to be valued against each other. And so you could actually take in another community's currency and it would be worth something. So it seems to me that Bitcoin is just another one. It's a community that wants to trade together. And I don't see what the logic would be for shutting down, say, Bitcoin, if you're not going to shut down every other community currency in the country, which seems to me you can make a case that what's the harm? Let the market decide.
I'd like to, I'm not as pessimistic as you, Catherine. I think that I'm not as pessimistic in thinking that the tools of Satan and powers of forces of evil are going to be able to stop this, even if they want to at this point. All the technology can be recreated in any graduate department of mathematics in any university in the world. And it's all so, what we're looking at, the systems we're working on building on blockchain look like they save about 90% of the costs of, and so there's such economic imperatives. I don't think anyone can stop this now.
Oh, I hope you're right. But I would like to say, one of my fantasies is that we could successfully bring litigation and assert a common law right of offset on all the money that's been transferred through the Federal Reserve illegally out of the U.S. government and literally get the ownership of the central bank back, because I think that would facilitate the transition.
Good luck. Good luck on that. I think everything that has to do with the Federal Reserve trips some wires in Washington and a whole bunch of unseen forces come to work, and none of our normal intuitions about accountability of government seem to come into play.
Well, despite that, the Federal Reserve really has not taken an adverse approach to Bitcoin yet. And it's, I've been watching this very, very closely since the inception. And it's actually been quite fascinating to see the Fed's kind of evolution. So in 2014, the first time the Fed said anything about Bitcoin was when Senator Joe Manchin asked Janet Yellen, chairwoman of the Fed, if she would ban Bitcoin. He said, there's people buying drugs and all this illegal stuff with it, will you ban it? And her response, this was during congressional testimony, her response was, we have no jurisdiction, shut the F up, next question. Really? It was, that was the first time the Fed said the word Bitcoin, and it was under congressional testimony, but she just said, we do not have jurisdiction, next question. And that was it. We didn't hear the Fed say another word about Bitcoin or blockchain until July of 2017, so this year. There was a paper that was put out, but the next time Janet Yellen said these words were earlier this year, and she said this actually twice now at a conference, not this conference obviously, but a public setting. she was asked about blockchain, and her response was, this is an important technology. She didn't elaborate a lot, but she said, this is an important technology, and we should be doing everything we should to understand it. And as someone who's been to a lot of Fed press conferences, so I've been studying monetary policy since long before Bitcoin, and a lot of that was inspired by many of you and many of those who are here today, and I moved to Washington to work and fight for a better economic future. So I paid a lot of attention to what happens in any type of public opportunity to engage with the Fed. And essentially, anytime the Federal Reserve is very, very, very conservative, and I did this with Ben Bernanke and Janet Yellen. And anytime they say anything publicly, they're just incredibly conservative because they could sneeze wrong and the markets will change. So there's not a lot. So the fact that she said this is an important technology was a big, it means they're really paying attention. So yes,
Well,
Dennis.
and it's easy to understand the reluctance of the Federal Reserve to give any clear answer on this because the Federal Reserve enables the cover-up of the boom-bust cycles through quantitative easing. And with that simple mechanism, they're able to make the economy a black box. They've never passed an audit. Ron Paul and I were the only two people in Congress who tried to push to audit the Fed. And their lack of auditability is connected directly to the lack of transparency, which they prize. And when you go to blockchain, which has a higher level of accountability, and it does have, at some point, it can be certified to have an audit trail. It's easy to understand why the Fed wouldn't want anything that would expose their underlying defects.
So if central banks were to start adopting and issuing their own blockchain-based fiat digital currency, thoughts on how that would impact Bitcoin? Good, bad?
Well, it would validate the whole crypto space, and one dynamic would be it would validate in a way that the public, obviously the public is not going to understand this at any level of depth, but that the underlying technology of crypto had been endorsed by issuing digital money, I would think would have a salutary effect for Bitcoin itself. It's not like it would be crowded out overnight.
I would guess there's two ways to design a digital currency, and one would be, or a blockchain currency, one would be public and one would be private. And I would guess that the central bank would issue a public digital currency, one that, so that would have all the protection, like consumer protections. You could still sue. You could reverse a transaction if the party on the other side didn't perform. So you could still have niches where they would have their currency doing something and showing what a good thing blockchain was, or what the cryptocurrency on something like a blockchain, and then Bitcoin can be doing something else, which is private trades or whatever their niche is.
The other thing, I think it's important to understand that so far, Bitcoin in the cryptocurrency market has been a real positive for the central banks, particularly the Fed, in two ways. One, it's shifted tremendous demand out of the gold market, and essentially what they've been trying to do is maintain, the price of gold is a smoke alarm, and they like to make sure the smoke alarm is turned off while they're engaging in a very liberal monetary policy. But the other thing is it's soaking up a lot of dollars, essentially, that might be causing inflation elsewhere. So Bitcoin, in some respects, has been very good news for the Fed.
So if gold is a smoke alarm, then what is Bitcoin? What's the analogy there?
Well, I think right now Bitcoin is a speculative investment. I mean, I'll just give you my conjecture because I've spent a lot of time, and so has this gentleman, focused on sort of how the markets get intervened with. One of my favorite quotes is from one of the Goldbugs said about 2 years ago. He threw up his hand in disgust. He said, you know, we don't have any markets anymore. It's all just interventions. And, but if you look at the extent to which the Exchange Stabilization Fund and other mechanisms of both the Fed and Treasury intervene in the stock and bond markets, the amount of money it would take to pump Bitcoin is nothing for these guys. I mean, if you look at how much they're intervening with in the markets all day long. So I don't, you know, I have no idea why the price of Bitcoin is doing what it's doing, but it wouldn't surprise me if they weren't happy to see it rise dramatically.
And that's because they wanted to soak up money that would otherwise be going into gold?
Well, it's a couple of things. There are a couple of reasons why they might want. One, you've done a tremendous job of pulling people out of the gold markets, and the most feisty, vocal people. Okay, and so it's very helpful, even though it's a small market and a small number of people. It's just very healthy to have those. The other thing is, a lot of the people who buy and trade Bitcoin are very, very smart, and they're helping to figure out the technology. One of the things I mentioned yesterday, there's a wonderful book I recommend it to everybody here called The Master Switch by Tim Wu. And he's a professor at Columbia, ran for lieutenant governor of New York. And it's a history, the subtitle is The Rise and Fall of Information Empires. And he gives the history of how a new technology will come out. Everybody has an innovative period. We have this wonderful blossoming like we see at this conference here. And then wham, suddenly everything centralizes. And he goes through many, many phases over the last 100, 200 years. And I think our challenge here is, how do we make sure this time it's different?
Interesting.
You should read that book.
Well, let's talk about some efforts that are underway. So what are some central banks that have, well, I guess what are the most
Well, I
sophisticated?
just want to know if Patrick's starting a central bank. Sounds like you're starting one.
We have central bank on a box. We will have this done by December. And imagine being able to go to a completely collapsing place like Venezuela or Syria, tell the central banker, here's your laptop, you generate a key, boom, 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 put in your safe, cold storage, and from now on, when you want to issue your country's fiat, you just type in how much you issue, and it gets issued on blockchain, and everyone in your country just downloads an app. So what's cool is countries may have only 10% of people have a bank account, but 140% of people have telephones, because people have 2 telephones. So you just download an app, and now through your app, you can pay for your chicken, you can do everything you would do. You could actually run an economy. And then we staple peer-to-peer lending on that, and you can start rebuilding all the functions of a whole financial system, but without those institutions we've been relying on. That's
So
what we're
where
building.
are
We're
we
very
going to
close.
prototype it first?
We're talking to different central banks. I just came from China. And China, so the central banks I know that are working on this stuff are China, Netherlands, Sweden, Bank of England, and Canada. But I've just heard the Bank of China said that they're not going to be the first. They're going to wait until some other country introduces this. It's a real opportunity for some other nation to actually introduce what becomes could be a new global reserve currency.
I'd like to jump in here because, you have central banks that are moving worldwide to get into digital currency. You mentioned People's Bank of China. They're actually doing trials right now on a prototype currency. And it would work in 4 steps. First, to create the cryptocurrency and transfer it to commercial banks when they need more liquidity. Second, to transfer the cryptocurrency onto customers' digital wallets. Third, to wire the cryptocurrency from digital wallets to merchants' digital wallets or accounts. And fourth, to have merchants deposit the cryptocurrency from their digital wallet into their commercial bank account. And as you pointed out, the Bank of England has published a number of reports. I actually have one here right now, done by their leading economist. Bank of France is in a blockchain experiment for interbank payments. The German Central Bank in 2016 revealed a conceptual study for blockchain-based settlement solutions. The Dutch Central Bank included digital cash as an option in their 2016 report. The Danish Central Bank issued a report in 2016 on the e-krona and making currency units traceable at all times using a blockchain that chronologically records and allows tracking of all e-currency transactions. You mentioned the Swedish Central Bank. They're issuing a report in 2017 on the e-krona. The Bank of Canada published a paper in May 2017 that private digital securities could circulate widely only with government regulation. But public digital currencies can always circulate widely if they're an instrument by which taxes can be paid. And you have central banks and authorities that are looking at digital currencies in Hong Kong, Singapore, Vietnam. But I'd like to add this as a cautionary note. The big mistake that all the banks appear to be making is they're replicating the same structural flaws in the present system, which means, boom bust, and you alluded to that before, about building that in so you can basically detect a movement.
Yeah, it's kind of funny, and I was describing a couple of days, we're building a blockchain version of Wall Street too. And we have this, and it's live, and it's working. And the banks who are trying to do theirs, it was interesting to me over the last couple of years in talks with them to realize how much they wanted to rebuild the system with all of its current flaws. It's like you've got this new, I tell them, it's like we've got this new Maserati, and you're insisting on installing your lawnmower engine in it. We don't need a lot, we can do much better than that. But it's because those bankers want all the various opportunities for net settlement and various games that go on in the settlement process.
So the question would be, how do you avoid the problem? And one way is to have the national digital currency issued by the national treasuries or mints, with central banks being agents and custodians. So they're not, in the ball game as being the people that are issuing it.
I'm sorry, you would have who issue it instead of the central treasury?
Have it issued by national treasuries.
So a separation of powers.
Yeah, you just have the central banks being the agents or custodians. It takes away the power from the central banks.
Now you mentioned you said a public solution, and of course in this community we're seeing a lot of private blockchains that are being introduced mostly by regulated financial institutions, the banks, corporates. So I guess thoughts on if central banks would steer towards a public versus a private blockchain issued digital currency.
Well, the difference with a public system would be that you could your name would be on it, and so people you can actually you had asked who had gotten the farthest along. I think the Bank of England has gotten the farthest along in theoretical projections of what you could do, one of which would be the full reserve banking, eliminating fractional reserve banking among private banks. But India has gotten the farthest along, I think, in terms of what you could do with a public, this whole technological system. So the first thing they did, like 5.5 years ago, before that, 50% of the population had no IDs because they were not born in a hospital, so they couldn't get bank accounts. They were borrowing at 60% interest, payday lender loans rates. So they did digitalized scans and thumbprints, and they got the entire population. 1.1 billion out of 1.2 billion people now have IDs, so they can prove who they are. Then they made it very easy to get a bank account, so not everybody, but lots of people got bank accounts. Then they did this payment system where you can actually transfer money to a friend or whatever, peer-to-peer. So you can prove your identity. All you need is their telephone number, and you can transfer the money across. So I think I understand it's like the telephone company adds it to the telephone bill, and that's how the money transferred. And the fourth thing is India Stack, where this is the really cool part, where they've got all your information. You can choose who to share it with. So you can share your medical information with your doctor if you want or not. Your whole medical history. You can share your payment history. So you can prove that you're a good pay, you paid your utility bills, etc. So these little tiny shopkeepers that before were paying 60% for payday loans now can get a very cheap loan in 5 minutes on their cell phone just by, they say, I want $500, and then the various peer-to-peer lenders, people with money that want to lend, will give you the terms, and then they can click which loan they want, and it's done. So it's basically like a credit card that you get on your cell phone. But that's called a public system, because you want people to know who you are. The idea is to show your identity and to show that you are a good pay. So the trust is in you personally. It's like a community currency system where you want people's trust, or you want to be known. The fact that you have a good reputation is what you're trading on. And then, so that's the opposite of a private system where all you are is a long code. So the code can be followed, and in that sense, it's transparent. I mean, nobody can fiddle with it, but nobody knows who that is at the end of the code. And one of the downsides of that would be if you pay for a product and the product is defective or whatever, you can't really, there's no recourse to it. So there are pluses and minuses, but anyway, I think a national system would probably be a public system.
So let me just jump in. I'd like to explain one of the reasons you will see financial people, central bankers, financial regulators want a complex process with many more steps than we think we need. So let me give you an example. In the early 90s, I took a hold of the technology and I said, oh, this is going to solve everything, and I'm going to take a company and I'm going to prototype the economics of a government, a business, a community, and figure out the solution to everything. And everything was totally high tech. Everything was high speed, the fewest steps possible. We had all the best technology. We were going really, really fast. And then I litigated with the federal government now. And if you came to my office in Hickory Valley, Tennessee, I live across from the Hickory Valley Cotton Gin, you would see what you would describe as the most inefficient operation you've ever seen. You would see hard disk copies of everything I have on the web in different safes around the world. You would see everything in paper. You would see everything in 4 or 5 steps. And the reason you would see that is because understanding the legal and political and information systems that I'm dealing with and the absence of integrity, that is, in fact, for me, a much more efficient system. So if we're going to have anywhere from a financial institution to a central bank agree to come down and do things in very simple steps and high speed, high tech, it comes back again to how do we get integrity in those systems? Because I don't know about you, but in information systems, I'm seeing the integrity going the other way. So, well, what I'm seeing is significantly, I mean, every year I spend a fantastic amount of money dealing with everything from spam and junk mail to denial of service attacks. You know, it's a war. You know, we're in a war. And it's you know, and it's constant. The amount of time and money I spend on sort of, you know, digital warfare, you know, it's a major expense. Sure. Yeah, so I'm sure you do.
Absolutely.
Okay.
1,000 times a day, people try to hack us.
Right, exactly. So how do we trust these systems and put more of our economy on these systems when it's going the other way?
Well, I think most of our economy already is on digital systems. I think only about 3% of currency is actually
Right.
paper.
But it's, you know, it's on financial institutions have those 26 steps because they're concerned about these things and they're using those 26 steps to protect against it. And the more they go to, you know, a 2-step system or a 4-step system, the higher risk they run.
I'm not sure about that part. I think that the more you move into blockchain, the more their back office, gosh, it's amazing. People, and Catherine knows this, but if you're not involved in the back office plumbing of the financial system, right, you have no idea. It doesn't work anything like you think it works. And it is paper and Excel spreadsheets emailed, and I knew somebody who was working the Fed and telling me, you can't believe it, they still get like 12 emails a day with Excel spreadsheets, and then she wrote a program to get them to tie together.
Faxes, in faxes, yeah. Well, I mean, that's a good point. So a lot of the banks are, I mean, pretty much every bank, every major, at least national bank, is looking at blockchain. in some capacity, some much more further down the process than others. And the banks will be getting into implementation of their distributed ledger solutions, probably within the next year. I would expect a few pilots going into implementation. So if you're starting to see Wall Street, the existing financial system, adopt these distributed ledger systems for various back office purposes, clearing, settlement, so on and so forth, how could that affect central banks, specifically the Fed, because they are supervisors of most of these institutions? So do you think that will push solutions along inside the central bank as well? Could that push us towards a blockchain-based monetary system?
I think their surveillance needs will get met much, much better by the digital side of the financial system. They'll be able to track much better what's going on in the economy.
And is that good or bad?
Well, they'll think it's good.
They meaning the
central
Fed,
bankers.
yeah, or the bankers, the Fed or the bankers.
They think they'll have more fine-tuned acoustical control over that stuff they're trying to fine-tune.
So I have a question for you, Patrick. Okay, so no one has done more on the planet to illuminate some of the monkey business in the stock market than you.
That's very kind.
Okay.
Thank you.
You may not know this is one of the most courageous men in the country. So what do you think would happen to the equity market clearing system in the New York Stock Exchange if you blockchained that, given where we are probably, given your work on?
Well, I would have said years ago, I thought that there was a multi-trillion-dollar bezel, pothole buried in that system, waiting to get, was going to explode. I don't know. After 2008, there's another thing. Trillions of dollars went places. We have no idea really where a whole bunch of money went. But that may have been part of the bailout. Maybe there was a reset there. I don't know. I used to think 10 years ago that there was a multi-trillion-dollar black hole in there that was starting to, we were exposing. Just as you did, Catherine, we're mutual admirers here.
He did the stock market, I did the mortgage market.
Right. And your stuff on that, how much the U.S. government's own books don't match?
Well, here's my concern, because I think we've had a financial coup d'etat. And what I would like to do is not, we're going to go through a very dramatic and radical change. It's inevitable, I believe that. So how do we go through this change without further empowering the people who stole all the money in the financial coup?
Well, that's where I feel a little bit more optimistic. I was out at this Silicon Valley company a few years ago, and it's a stealth company backed by the guys, we backed it, and the guy from AOL. And they're on the wall. They have 160 institutions that basically bind civilization together that they saw the blockchain as disrupting. And I see that the blockchain, these are like, for 6,000 years, we have accumulated these barnacles on the hull of civilization. And the barnacles are institutions that permit us to engage in consensual exchange of some kind. So we have these 160 maybe barnacles on our hull that blockchain is going to scrape off.
Patrick, could I ask you, since you've been involved in securities, wouldn't blockchain help eliminate security fraud?
Oh, yeah.
Because you have only one copy, essentially?
Good for you. That's exactly it. When you rebuild Wall Street on blockchain, you make all kinds of mischief that goes on, all kinds of fraud that currently goes on in the market actually just becomes impossible. That's exactly right.
Okay, so I want to bring up one.
Someone tells me they'll have to come up with a new name for Wall Street.
So I want to bring up one secret. What I was doing in the 90s was downloading all the data of government money and then looking at it on a neighborhood basis. So if we had a true democracy.
You were HUD?
Yeah, but I was collecting all the government data government-wide. If we had a true democracy, you would get financial statements, not just for the federal government, but for your neighborhood. And you would be able to get actionable intelligence about how to improve the performance of government money and resources in your neighborhood. Now, that information was suppressed during the 90s, and American citizens have never really gotten that intelligence. If you have 1,000 hours, you can put it together for your neighborhood, but most people don't have 1,000 hours. But let me tell you the little secret I learned doing that, which is the secret to how we transition this. And that is, if you look at the current equity valuation of all wealth on planet Earth, however you estimate it, it's less than 1% of what it could be. That's how extraordinary this suppression and centralization has been. And that's why it's so important, whatever we do, that we sequence the transition in a way that rebalances and diversifies power. Because it's the centralization of power that is doing this, and what we need to do is completely rebalance the power. And part of our struggle is this is not a national issue, it's entirely global.
So we have.
I'd like to, if I may, Perry.
Yes, of course.
You've identified the philosophical underpinnings of the dilemma we have, which is that the Fed's creation was about the centralization of,
Right.
of banking power. Washington, D.C. exists as centralized power.
Right.
The more money goes into the Department of Offense, the more money that goes into the Fed's quantitative easing, the more bailouts that occur, the power is centralized. I actually chaired a congressional subcommittee that investigated the subprime meltdown and looked at the bailouts. And at the same time, I tried to see if there was a way, while the banks were being bailed out, which I opposed, to make sure that people could stay in their homes.
Right.
And the Democratic Treasury Secretary at the time, Tim Geithner, told a meeting of Democrats that millions of people are going to lose their homes. Well, he's asking for us to continue to help prop up Wall Street. And this happens when you have centralized power. Now, what you're talking about and what blockchain represents is an opportunity to flip the equation, decentralize the power, take it to the local level so that power flows up from the local level to the top instead of the top down, which is oppression. So, this is really the key issue.
Right.
That is a principle of governance as well as a principle of finance. And thank you, blockchain, for the introduction of the technology which changes all the discussions about governance and finance and everything else.
So on that point, we've got about 10 minutes. I'm going to ask one more question to address the global issue that you raised, and then I'll open it up to the audience for some additional questions. So, Dennis, you mentioned the work that the People's Bank of China is doing, the Chinese central bank. So we're seeing some mixed signals from China in that the central bank does have efforts underway to potentially harness this technology. But then on the other side, they've also come out with some very draconian policies in terms of the public sector or the private sector. For example, the banning of the so-called ban on ICOs, shutting down the exchanges, making it incredibly difficult for the private sector to engage in the crypto economy. So what does China have up their sleeve? I mean, what is your kind of thought behind the madness?
Well, in a way, you have to look at China and Russia both because they're both players in this. And we're getting mixed signals coming from both China and Russia on this. Regulators in both countries are implementing drastic measures to curtail private sector activity in the blockchain sector. But we're also seeing signals of increased interest for government-issued blockchain applications, including state-issued digital currencies. So I think that as far as, it's very clear these governments will want to control blockchain activities within their jurisdictions. And we're also seeing that as a result of their experimentation here, you're seeing initiatives and vehicles, including the One Belt, One Road policy, where they're really interested in creating the old Silk Road, and they're looking for ways to help do that. And as they get into more and more transactions, blockchain is going to be absolutely imperative for them to be able to advance their economic strategies. And I think the smartest thing, of course, let it be said, that there are some who believe, in an American imperium that will not be very happy with that. But from my view, it'd be good if the United States participated, so we'd have kind of a win-win scenario and got away from the competition and more into the collaborative aspects of it.
You go.
You go. Well, I'm
wanna know
wearing
what
my
you said.
Maoist jacket because I just came back. And Confucius say, 孔夫子说天下大同. It means there's great harmony under heaven. The Chinese prize social stability. They have become the ICO bubble, coupled with the fact that there have been an awful lot of ICOs that seem to be not much real business underneath, that they have suddenly gotten really spooked, and they are afraid of social unrest that will come about if and when there's a great big crash. So that is why, at least as of last week, they told me I was there the day they shut off all the exchanges, or they give all exchanges 30 days to be out of business. And so anyway, they say it's all about social stability, and they kind of want to sit back and see. They seem to have, first of all, China's now announced for their new 5-year program, the 3 key technologies are big data, AI or machine learning, and blockchain. It's like this national priority in their new 5-year plan is this technology. But I think my sense is that what they saw a year ago, what they greeted with excitement, even now they understand really just how disruptive this is going to be, and they're sitting back because they want to see what happens in other countries. That's what they indicated. They could be shutting me out.
Interesting. Well, I'd like to save some time for audience questions, if that's okay. And we do have some questions, so you put your hand up first. So.
And with all due respect, there's a little bit of kumbaya going on here because we have not addressed in this discussion a major issue, which is how does policymaking meet this new technology? If you were to release your digital currency as a fiat currency mechanism within a country, who controls what decisions are made in that heuristic system, which is theoretically believed to work better than the current system? We have never tested a system out there with a few simple rules that drives monetary policy purely through that automated manner. And, as a practitioner in this space, I can tell you that the number of unintended consequences that we can't even see out there in implementing such rules could be drastically dangerous. So I'm sure that there are ways to address this, but I'd love to hear your comments about how policymaking, for example, and what lines of code to change, what heuristics to add to the system when you see things perhaps going out of whack. Who controls that? Because I would hate for the answer to be Facebook. Right? And I would also...
You'd hate for the answer to be what?
Facebook.
Please repeat the question.
Okay. Well,
There's a lot of questions in the question, but I think he's, asking, the devil's in the details, right? So this is a major topic we're talking about. So
how does policy meet?
I'd like to make a try at it. I don't know if it'll answer your question directly, but from my time in Congress, I've thought about monetary policy and its relationship to some of the broader issues in a society. And as I started off my presentation, I drew some parallels between a bill that I introduced and that would facilitate some of the same features that blockchain's about. But here's this bill that I wrote, which was called the National Employment Emergency Defense Act, actually has these characteristics. It would change the role of the Federal Reserve. It would put the Federal Reserve as a bureau under the Treasury. And the basis for that, it's a little copy of the Constitution I carry with me, in case the original one disappears. And I have, and this in Article 1, Section 8, the power to coin money, and it's not, not literally just coin, but the power to coin money came from the government. Now, I'm not interested in the government running banks, because I don't think banking is a proper function of government. But control and oversight of the monetary system must be done by the government. And so the bill that I introduced had three features. Number one, the Federal Reserve incorporated in the U.S. Treasury, which would nationalize the money system, but not the banking system. Two, the fractional reserve lending would be stopped, so banks wouldn't be able to create money out of nothing. They'd still be in business and act as intermediaries with their clients, but they'd no longer be able to create the nation's money supply. And three, new money would be introduced by the government, putting it into circulation and to meet the needs of the country. Now, and blockchain would fit right in that. And so, yes, there are policy considerations, but with me, one of the principal ones is to look at the role of the Federal Reserve. Yesterday in this auditorium, just about the same time, 24 hours ago, we had Dr. Griffin, a very learned person on the Federal Reserve history, talk about how the Federal Reserve is just a scam. And it permits a system in place that basically disempowers everyone, the 99% and maybe even some of the 1%. And I'm not talking about taking anything away from, with this plan, about redistributing wealth. I'm not interested in redistribution. I'm interested in distribution. And if you have monetary policies that are consistent with the constitutional prerogatives that were laid out by the founders, I think we could get to that.
So the system you described, that Patrick described, if you try to automate the monetary policy in a place, the issue is always going to come back to you're under the governance of that place. And then the question is, does the governance have integrity or not? And we're always coming back to this question, and I'll tell you why. I've said for many, many years, crime that pays is crime that stays. And within a system, the question is who decides and then who enforces. If you read the Constitution, we have the obligation to enforce, but in fact, we haven't enforced, okay? And in fact, if you look at where we bank, I think 50% or more of Americans have directly or indirectly banking relationships with JP Morgan Chase. Okay, so if you look at where we vote with our time, with our attention, the media we watch, the banks we support, we're not enforcing. A lot of people have been talking at this conference about how we live our lives personally and whether we're enforcing what we say our values are. And what this is going to come down to for 7 billion people planet-wide is, are we going to self-enforce, and are we going to enforce by how we conduct ourselves? Or are we going to need a central structure to enforce? But ultimately, for any monetary system, again, I say there's no financial solution for a political problem. Any financial solution is going to be under governance, and that governance has integrity or doesn't. And so when Patrick prototypes this in a place, the question is going to be who's going to govern the implementation and oversight, and do they have integrity according to whatever governance structure has been agreed to by the people of that place.
And we have 1 minute. So closing thoughts from Patrick and Alan.
You go first, Alan.
Okay. Well, it seems to me that it's very likely that the U.S. and all the big countries will wait for somebody else to do it first and see how it works. I think it might be India because they have the political will. I mean, they have these desperately poor people, and they don't have this prior infrastructure that they have to break down. They can just zero right in on the goal. And if that works, then everybody else will follow. And there will be, major consequences that it seems to me that private banking will probably disappear. Private fractional reserve banking. The reserve currency system would probably disappear. We would no longer be the reserve currency for the world. It wouldn't be necessary. That would change a lot of political things. So it's an interesting time to be alive.
And I'll make 2 quick points. One is to the gentleman's question, the question of central banks going digital and the question of instituting rule-based monetary policy are 2 different questions. Central bank could take our central bank in a box and issue the digital currency, and if they still think that they want to manage the business cycles of their country by dialing that, they can do it on our central bank in a box. I think they'd be smarter to just put some basic ground rules in, and I think the unanticipated consequences are going to be far fewer on some simple rules than on the people who think they can fine-tune things. And secondly, ultimately, what we're trying to get to is this: a way we can communicate with each other information about two things: value and scarcity. That's what price is. It's packets of information about value and scarcity. Currently, we have to communicate our information through a medium controlled by government mandarins. Ultimately, it would be great if it was a medium that was not run by government mandarins, but just governed by the laws of mathematics. A good step in getting there is to talk the central bankers into digitizing their fiat. My hope is that once everyone was on that system, they would start thinking, what do we need that fiat part of this for?
Can we have one more question, please?
We're out of time, but he's back right now.
Thank you, panel, very much. Wow, this is wonderful. Part of me is going, gee, I want him to go for another 3 hours. The other part is going, no, Mr. Clock says it is time.